Hey guys, welcome back to my YouTube channel. My name is Bessie Munyori. Of course, as you all know, this is a channel where you learn everything investing, saving, budgeting, about ETFs, treasury bonds, stocks, and everything you need to know about gaining a life of financial freedom. I also talk about things to do with being an international student in Australia. So if those are things that interest you, don't forget to subscribe, comment, share, hit the notification button so you don't miss another episode. So today I'll just be doing a video regarding the 6 dividend stocks that you can invest in Kenyan market. And I had done this video around March last year, and most of you complained about not having a good sound. There was background noise, but as you can see, we have a mic, we have a better camera, and yeah, so that's good. And also something I'd like to say is this information is information that I get from my brokerage company, the one I invest with, so you can trust it and you can also do your own research. Stocks are basically you owning a share of a company. You don't have 5 billion to buy like Safaricom, but you have maybe 100,000 Kenyan shillings, so you buy a share of that company. And as a long-term investor, it's good that you focus mostly on dividend paying shares, because these are shares that will pay you passive income. They help you protect your initial capital, and they also provide long-term growth. But it doesn't mean that you can't put some capital gain shares in your portfolio. You can also do that. But for this video, we'll be talking about the 6 dividend stocks that you can consider to add into your portfolio. The market is green, the market is doing very well. So if you want to enter into the market, the best time is now. You might say that you want to wait for the shares to go down, but they might not go down, and you'll find yourself losing on some money. If you had invested, let's say 500k last year when I was doing that video, I think this year you might be having around 800k. And as you can see, that's really good growth. That's exponential growth. So as I'm doing this video, it's 22nd February of 2026. Don't just listen to this information, talk to your broker and start your investment journey. The first stock is Stanbic Holdings, which is at 250 Kenyan shillings. And last year when I was doing the other video, it was around 152. As you can see, they have like increased with 100 bob. So they have a high dividend payout ratio of around 55%. And this is a very important thing that you need to check, because this is just the ratio of the dividends that they pay to their shareholders. So as you can see, they pay 55% of their profits to their shareholders, which is a very good thing. Stanbic Holdings growth is attributed to the net interest margins, balance sheet growth, and strong trading revenue. The investment banking subsidiary stands as a key contributor to non-funded income and also has a strong support from the parent company, which is Standard Bank Group. And the best part is that the dividends are paid semi-annually. So every 6 months, you'll be receiving dividends. And this is a good definition of passive income, because as you know, we want our money to work for us. We just don't want to work so hard. We want also our money to work for us. Also, the best part is nowadays you don't have to buy a minimum of 100 shares. You can buy as low as 1 share, I think. So guys, you have no excuse. Kindly get into the market right now. The other dividend share is Absa Bank, which is at 28 Kenyan shillings from 19 shillings. The key positives are dividend yields is 10.7%. They have a high dividend payout ratio of 50.2%, which is good. As you can see, half of their profits, they pay them to their shareholders. They also have a high operating efficiency compared to other peer banks. Another advantage is that they have a strong asset quality, and the best part is that they pay dividends twice a year, guys. If you're a long-term investor, if you're looking into money working for you for the long haul, kindly get into dividend investing. Dividend shares are good because they will pay you dividends as you go about your job, you're just receiving some money, you know. And also dripping your dividends is another thing that can really catapult your investment journey. And this just basically means like the dividends you're receiving, you're reinvesting them into other shares, and this makes your portfolio just become bigger. The other dividend share is Cooperative Bank, which is at 28 Kenyan shillings from 16 Kenyan shillings. As you can see, almost all of these shares are doing very well, and as you can see, most of the dividend shares are in banking. Key positives include dividend yield is at 11.5%. They have a relatively high dividend payout ratio compared to their market peers. They have a low credit exposure in high risk sectors like tourism, manufacturing, construction, and building. If a institution is investing big on these sectors, they're definitely making good money, and they pay their dividends annually, so you will receive passive income every year from Cooperative Bank just for holding their stock. The other dividend stock that I like to recommend is Standard Chartered, which is among my favorites. It's really doing well. Its current share price right now is at 336 Kenyan shillings from 274. As you can see, it's really doing well. And the key positives are dividend yields of 10.3%, and they have a high dividend payout ratio of 50.8%, which is good. They also have a high operating efficiency, strong asset quality, high liquidity ratio, and they pay dividends semi-annually. So every 6 months, you'll be receiving dividends and passive income. That's like the best part about all this. And they're also currently performing really well. The other dividend share is NCBA Bank, which is at 88 Kenyan shillings from 50 Kenyan shillings. The key positives are dividend yield is at 10.45%. They have a high dividend payout ratio of 42.9%. As you can see, most of these companies, they have a high dividend payout ratio of at least 40%. And that's why I told you dividend paying companies usually prioritize their shareholders, because they need to pay you money for buying their stock. They need to pay you money for investing in them, as compared to capital gain stocks where you have to wait for the share to go up so that you can sell. Dividend shares pay you just for holding their stock. For these, dividends are paid semi-annually, and that's what we mean by passive income. Like, we need our money to work for us. They have a strong asset quality, a low cost of risk, and high operating efficiency. The other stock, which is an absolute favorite and is performing really well, is British American Tobacco, BAT. The current share price is at 515 Kenyan shillings from 380 Kenyan shillings. It's still the highest stock among all of them. If you go into the NSC website, you can see the market is green on all these dividend paying stocks. The key positives include the dividend yield of 13.2%. It has a high dividend payout ratio of 89.8%. This is so good because that means that they pay out 89% of their profits to their investors. You need to hop onto these guys. Don't just hear people making money and you're just chilling and waiting for maybe the stocks to go down, because it doesn't always happen like that. They have semi-annual dividend payments, and that's the best part, because they're also a good performing company, because of course people are always going to smoke cigarettes. So if you might as well cash out on this. I know other people prefer stocks that are not like causing harm to other people. It's called ethical investing. But yeah, if not, you can hop onto this. So guys, best part about dividend stocks, like I said, they provide consistent passive income, which you can use to catapult your portfolio, and they also protect your capital, and they also provide long-term wealth. So guys, if you haven't hopped onto this is the best time. Don't wait for the stocks to go higher and higher and higher, and then you're like, I wish I had invested because I could have made money. No, the best time is now. So guys, if you resonated with this video, kindly subscribe, comment, share, hit the notification button, and I'll see you on the next one. Bye.